Hello and welcome to the Markets in 3 with me, your host, John, Senior Market Analyst here at Anzo Capital. Markets in 3 is here to provide you with the latest moves in FX markets, as well as the key important data. Today, we've got a big one. We're going to be talking about the NFP predictions. Obviously, NFP coming out a day earlier than usual because we have a public holiday in the US tomorrow. So if you didn't know that and you wasn't aware of that, now you are. I'm going to talk a little bit about what's happening in markets, what the potential could happen for NFP, and we're going to talk a little bit about how to lose well in trading. And it's such an important skill to learn. So I'm going to kick it off today with the US dollar versus the Japanese yen. Why am I kicking it off with that? Well, it's such an important chart to be watching at the moment because we are at such a big level of resistance. If we take a look at the chart here that I have in front of me, we have the US dollar versus the Japanese yen on a weekly chart. We can see that price has come up into this 162 handle and is currently rejecting it from a weekly perspective. The last time we were in these levels here, we saw a very strong rejection. We actually saw intervention coming in from the Bank of Japan, which saw price fall from the high 162s all the way down into the 140 level, which is a huge move for price. And you can actually see that I am short right now on US dollar yen as well. I've basically been looking to try and short the end of day lows since we came up into this 162 level. The only one that didn't get triggered was below this swing low here. So every day I've been kind of like looking at price coming into this 162, looking to put a sell stop order below the daily candlestick lows. So this one has finally triggered. Now I've actually just used the same scale trade as what I did yesterday. So what I was looking at was to sell below this candlestick low, stop loss above the high. That didn't trigger, so I've moved my order above yesterday's low, same stop loss there, just so I didn't have to adjust the risk in any way, shape or form. And we've been triggered. The market is pushing to the downside here. Now, why is the market moving like this? Now, this is always something that I like to think of. When it comes to trading, I always like to think of the why. Why is something happening? Okay. Now, it's not necessarily to cement an idea. It's not necessarily to say, oh, it's happening because by X, Y, and Z. It's because if we know why it's happening now, maybe we could see that happen again in the future. Now, what has happened is there's been a little bit of a risk-off sentiment driving into the market, and it's mainly down to the fact that the Kospi, which is the South Korean market, has started to see some big shifts. Okay, we're starting to see investors take a lot of profits potentially in there, but also investors starting to become a lot worried about what's happening in AI and in terms of the compute capacity that can actually handle AI. So we are starting to see this AI bubble start to, I won't say burst, but it's starting to kind of bubble away in terms of we're starting to see it have an impact across global markets. If we just open up the market watch here and we go take a look at what has been happening across markets, we can see that if we go take a look at let's say the NASDAQ, we could also look at the 225. Let me just add in here. I want to add in the change. Okay, it's not letting me add that in right now. In the spreads. Let me just have a little look at what's going on over on the NASDAQ as well. So if we take a look at the NASDAQ also feeling a little bit of this pressure as well from the AI situation. Obviously, NASDAQ tech stocks, so any kind of AI infrastructure at the moment that is being questioned, or any kind of AI downside is also going to be affected in the NASDAQ as well. And we can see that prices in the NASDAQ are also starting to roll over here. We're starting to break back below sort of some key lows as well. So essentially what we're seeing today is a little bit more of a risk off play. That's why I'm not looking at this dollar yen move here as intervention right now. Okay. If this was meant to be intervention, we would see a very large move. Look at the last time we had intervention coming in. We had to move all the way from that 160 all the way down into the 155 very, very quickly. It was like a 1 day sharp movement. Hi guys, welcome to the stream. Noah, hi. Eclipse, Cat, hi. Hope you are doing well. Yeah, welcome to the stream. This is Markets in 3. Hope you're enjoying your time here right now. If you're enjoying the content, please give it a like and subscribe to the YouTube channel. I'm here to give you the latest sort of information that is happening across FX markets, hoping to inform you as well a little bit about the macro, the why things are happening in the markets, and hopefully help you upskill as well as a Forex trader. So stick around, got lots more coming up. We're going to be talking a little bit about NFP as well in a little bit. But focusing on this dollar yen move. Now, I got short on dollar yen, like I said, just because I think that we are around a large weekly level. We're at that 162 handle. Like I said, last time we had a really big intervention around that time. So we did see a large sell-off. Now, the talks around intervention aren't as aggressive this time across sort of the Bank of Japan members. But does that mean that we're not going to see intervention around these levels? No. Of course, there is still a possibility that we are going to get a large intervention. And that's what I'm trying to plan for right now. And I'm looking to see if we are going to get a very similar to move than what we did have back in sort of July of 2024. So that's what I'm looking for. Now, can this upcoming NFP bring a catalyst of a sharp intervention? Potentially. And it's going to really depend on how this NFP plays out today. And we'll take a look at that in a second. But looking at dollar yen right now, currently short, looking to see if price can break to the downside here. We did see quite a large move coming from it. We are starting to break through sort of many different kind of structure levels. You can see we had this kind of like ascending triangle recently that price broke out of and continued higher. And recently we've broken down through all these kind of 4-hour lows, which is nice to see because obviously I'm on the short side. Now, I want to see some kind of continuation patterns now. I want to see some kind of build up here and then a continuation of that move. If we were to get sort of a very similar sort of setup on the short side, so maybe a descending triangle, I would look to add on the break of that and to see if we can get a continuation down. But what I really want is I really want some volatility. I want some fresh volatility coming into the market, because that's where I think the Bank of Japan will look to intervene. We see they always talk about seeing sharp movements and high volatility. That's when they like to get involved and intervene within the currency market. So I've got a short position on, which is only a very small short position at the moment. Look and see if we can take that down. I just want to give you a quick update as well on the S&P 500 trade. I'm long twice on this market. I've took a sort of longer swing trade position as well as a sort of kind of a shorter term move. Look and see if we could kind of see a push up to the upside. I basically bought above this 1 hour candle high, stop loss below the low. Currently in this trade right now. Now, will the risk off sentiment try and roll this over a little bit? Potentially. It's almost like I'm a bit hedged at the moment with my dollar yen short and my S&P 500 long. But the reason why I'm S&P 500 long at the moment is because we have a really strong seasonal pattern that I've been eyeing up, and usually between the 30th of June to I think it's around the 15th or 16th of July, the S&P 500 has a really strong move. And that's what I'm looking to try and capitalize on at the moment. We have good data coming out of the US pretty much. The only thing that could throw this around as well is the fact that we're not going to really get any more forward guidance from the Federal Reserve. Chairman yesterday was speaking and basically saying that they're not going to give any more forward guidance. We are going to see the dot plot a couple more times before they change that. But essentially, yeah, we're going to be having to watch every single piece of data. And I think the market is going to be reacting a lot more violently to the likes of NFP, to the likes of inflation data, to the likes of GDP data going forward, because, we don't know what necessarily the Fed are directly focusing on. What he has made very, very clear, though, is that they don't like inflation where it is. Okay. So if we do see kind of the spikes up in inflation, I think that's going to be a real big problem for the Federal Reserve. And we'll probably see them not cut interest rates as what was expected this year. So very interesting dynamic going on here as well. But yeah, like I said, the chart check for me today is dollar yen. We can see that there's some kind of volatility coming into this market. I still like short ideas. So I'm going to continue to look for any kind of add-ins on this short right now. Let's go talk a little bit about what's happening today then. So we have a really big event coming up. It is the non-farm payrolls. So non-farm payrolls, obviously a very, very big event in the market. We can see we have 1:30 GMT today. We have the average hourly earnings, the non-farm employment change, and the unemployment rate. Now, a lot of traders just focus on the non-farm employment change. We don't just want to focus on that. Let me zoom in a little bit. I can see that it's not zoomed in here. We don't just want to focus on the non-farm employment change. Okay, we want to make sure that we focus on the average hourly earnings and the unemployment rate. The reason why you want to follow the average hourly earnings is because this will impact inflation. Okay, so if we see an increase in average hourly earnings, basically means that people are earning more money. If they're earning more money, what are they likely to do? They're likely to spend. So consumer spending is going to go up. If there is consumer spending, what does that lead to? Potentially demand. What happens then? Inflation can rise due to that demand. And if it is a demand side inflation, that is the bad inflation. Okay, that's what we saw in 2022. We saw a lot of demand coming into the markets. We saw job openings, you sort of increase. We saw, wages increase. If we take a look at the chart here as well, you can see back in 2022, you see that massive spike there, but that's COVID, obviously. Trying to narrow that down. If you take a look at the average of 2022 or between 2021 and 2022, we saw that kind of increase in average hourly earnings. And you can see it was almost beating forecasts every single month, which is not what you want to see if you want to try and control that inflation pressure. And obviously inflation can then tuck off to the upside. So today, looking to see how this one plays out. If we actually just go over to here, let's go to our pro economic calendar. Just going to filter this off and get US today. Need to refresh the page, I think. Here we go. So what we've got here from this pro economic calendar is something a little bit different than probably what you see. So you can probably see the difference here between the Forex factory one. Now the Forex factory one only gives you the actual, the forecast, and the previous. But if you look at a pro economic calendar, it gives you a little bit more information. It gives you a minimum and a maximum. And why is that important? Well, it's important because if we're going to see an extension of the move, then you want to be looking to see if we beat expectations on the high side or, miss expectations on the low side. If it kind of comes in a little bit around forecast, you can often see sometimes there's not really much change. So on the sort of high side today, we're looking at around 200,000 jobs. So what that tells me is if we see a report that comes out at 200 plus, that is a big number. That means we're probably going to see a significant dollar strength move coming into the markets. We're probably going to see our euro dollar drop considerably. We were talking about New Zealand US dollar yesterday. That could continue to fall as well. We'll probably see the stock markets have a little bit of a shock, a little bit of downside initially as well. And we'll see our gold prices fall. However, on the minimum side, we've got 25. So that's really low, right? If we look at what the previous was, 172, the forecast is 110. 25 is really low. So we'd need to see, if we're going to see sort of significant dollar weakness coming into play, we'd need something considerably lower than that 110 figure. 25 seems a little bit too low for me. I think if we come in around about 50K lower, that would be a significant change as well. Now, if we take a look at the unemployment rate, obviously they're just kind of looking at the forecast, which is 4.3%, 4.2% on the minimum, 4.4 on the maximum. So obviously, again, if you see an increase in the unemployment rate, that's not a good thing. So you probably see the US dollar come in lower, right? If you see the unemployment rate coming in lower, that is a positive thing. That basically means that there are more employed people. So you would likely see an increase in the US dollar off the back of that. And it all comes down to interest rate expectations, right? That's how the FX markets work. They work on expectations. So if you see a sort of a market which is doing really, really well, so let's say the US dollar, for instance, has been doing pretty well recently in terms of data, compare it to a market that isn't doing well. Canada, for instance, Canada's growth, very poor. Unemployment rate increasing. What does that lead to? A dollar CAD long position. And if you have been trading for a little bit and you trade in dollar CAD has been rising significantly. Interesting question. What happens when you live in a corporatocracy? Corporatocracy. I've never heard that word before, and you don't have generational wealth. It's a great question. I think that obviously, I could look at my situation and think, why did my ancestors not leave me any generational wealth? But it's a great question. But you know what? Everything revolves around these markets. I love economics for a reason, and it's because it's to do with everything in life. You may not see that like that, but have you, every time you go buy a cup of coffee, every time you go to the shops and buy something, you are having an impact on the economy in some way, shape, or form. A lot of the times people just see it as, oh, okay, that's the price of something, but they'll have noticed over the past, 4 years that the prices of stuff have just gone through the roof, right? A pint in merry old England used to be around £5. It's now about £7 or £8, which is bad for me. So yeah, but understanding that can happen and then being able to take advantage of it is a skill in itself. So if you're going to study anything, I think it'd be the study of economics. It'd be the study of how things work in markets and then looking for opportunities to be able to take. For instance, short dollar yen. Why am I short dollar yen? Because of the risk off in the markets, and we can judge that and we can see that happening. So that's how we can try and take advantage of something like that. The next thing we're going to go on to then. So NFP, I haven't even given my NFP predictions. What is my NFP predictions? If there's anyone in the chat, I'd like to see your NFP predictions as well. Let me see, actually. Let's see if I can bring in something here. Let's do a new poll. We're going to do an NFP predictions poll. NFP predictions. Option 1 is going to be 110. We'll go with the forecasts. Option 2 is going to be, let's go to the high side, 200K jobs created. And option 3 is going to be 25K jobs created. So you should see a poll in your chat now. I'm going to go more on the safe side. I actually think we're probably going to see something a little bit closer to 110. maybe a little bit shy. We saw the ADP figures come in as well earlier in the week. So what did ADP come in at? Let me refresh the page. ADP came in at 98,000. So we did see a decline in ADP, which can usually filter into the non-farm payrolls as well. So this is ADP non-farm is basically your private sector. And that came in at 98K. So that came in a little bit lower. So I'm thinking, we've got 114 on here. On the pro calendar, we've got 110 on the forecast. So I'm going to go a little bit below that. I'm going to say it's around about 100K for me. Is going to be my sort of prediction. But let me know your predictions as well. I'd love to know what you're thinking. So yeah. Right. Let's have a little look at our next big point then. So we're going to talk about how to lose well in the markets. Okay. So the skill of the day. Skill of the day is going to be how to lose well. Now, what do I mean by that? So losing well is actually a top skill to have as a trader. So one thing that I always look at is, or ask myself a question of, when I'm in a trade, is the trade still valid? That's what I always ask myself the question. So this is a New Zealand US dollar chart, right? I'm just going to put on the, sorry, I keep forgetting that I am on MT4, not MT5. So you'll see here, I had a sell position on New Zealand US dollar, right? And I got out of it early. Okay. And the reason why I got out of it early is because the likelihood of me getting stopped out of this trade became evident. It became higher, right? So I'm not afraid to cut a losing trade. Now, last year, I had 10 losing trades in a row. Okay, I had 10 losing trades in a row. But I only lost less than 1% of my account value. Okay. And the reason being is because I was willing to cut a trade before it hit my stop loss. When the conditions changed, just cut it, right? Most retail traders are hopeful. They see the chart, they take the trade, they're hopeful because they've took the position, right? They want to make money. So they take the trade. What happens then is the market goes against them and they still remain hopeful that it's going to turn around. And they don't want to lose at that point. So what you'll see retail traders do is they will move their stop loss, right? So let's say, for instance, let's put it on the screen. This was my entry, right? This was my stop loss. And my target was somewhere down in here somewhere. It was a positive RR trade, right? So let me change this. This is going to be our target. I'll put it in light blue. Entry, I'll put in, so it's lime color. Stop loss is the red color. Okay. So this was my trade. So why did I enter the trade in the first place? Well, what I saw was that the market was making this kind of lower low, lower high situation. We pulled back in to these highs here, right? And we started to reject it. And then we broke below a low on a lower time frame. So I entered the New Zealand dollar short here. Stop loss, I thought, well, I'm only risking a very, very small amount on this. So I was happy to put my stop loss just above these highs. I didn't put it at the high there because to me, that is just a little bit too close, because if price came up rejected, I could have been stopped on spread, right? So I always want to go, see the high where I think that I'm wrong and then put my stop loss above that. Okay. So that's what I did. Now, what happened then is we actually, this bar here was actually the meeting of all the Federal Reserve, of all the members of the central banks. And this was when Kevin Walsh was commenting, and we actually saw a dollar sell off a little bit through that. And the market rallied, came all the way back up into those highs, rejected, came in, and then I was on side again. What happened overnight then? Price started to move back. Now, in the London session, I did start to see that price was starting to rally. It was starting to break all these highs in here, right? With no real kind of slowdown. So why take a full loss there? Okay. Why take a full loss? It doesn't make sense to. So I cut the trade significantly early. Okay. And I wasn't risking a lot on the trade anyway, but I am willing to cut my losers early when the conditions begin to change. Right now, really speaking, looking back in hindsight and reviewing the trade, should I have taken a trade there? Maybe not. Maybe I should have waited for price to kind of get out of this choppy area. All right. But look, prices may be forming a bit of a false break here, so I might be able to now look at a potential entry, on the sort of breakout of the trend that's developing here, right? Because the market is starting to reject in and around those sort of 4-hour highs. I like New Zealand dollar downside. I think the dollar is a strong currency at the moment. Is it going to remain strong? Who knows? But at the moment, it is the strongest currency. I'm pairing it against the weakest. I think New Zealand US dollar is going to trade lower, and I'm just looking for an opportunity to do that. Right? We are trading at a level of resistance. Okay, so that's fine. But what I need to look for is that kind of break in the trend. I need to see these highs on the 4-hour chart not really getting higher, or if they are, they're forming this kind of pattern, this kind of like false breakout. So if 2 o'clock comes today and this candle on the 4-hour chart looks exactly like this, I am happy to look for another short entry on this particular market. So I'll keep an eye on that going forward. But remember, losing well is a good thing to do. So let's take a look at this S&P 500 example, right? I am long S&P 500. I have my reasoning. Price has made all the right things that I like to see. The market has made new higher highs, higher lows. We've come up in, but we're stalling, right? Where am I wrong? Well, my initial wrong point is below this 4-hour low, because if we take that out and move lower, then the likelihood is we're going to trade lower. But in that case, I will knock out both long trades here. I won't hold on to this one down here, hoping that price is going to start pushing back to the upside, because the conditions aren't there anymore for it to happen. Now, I can look at the hourly chart to give me a little bit more notice. I can see here the market is still technically making those higher lows. Every time we've come into lows at the moment, buyers have been supportive. So that's a positive as well. So I don't necessarily need to get out of this move yet. If we break below here, close below these lows, early warning sign to exit my position, and I will get out for a small loss. Okay. I am very, and this is something I've had to learn over time, but I am very good at cutting my losers early, because what I look for is the conditions to change. If the conditions change, I don't want to be involved in the market anymore, because it's not doing what I thought it was going to do. So why risk the capital? Okay. Very much same with dollar yen, right? If dollar yen finds support here, we start seeing a bounce back in markets, and the market then starts to like consolidate and then break higher, heading back towards these highs, fine, cut it. Doesn't matter to me. What I'm looking for is the big breakers, the ones that really move. Ones that we were talking about recently, dollar CAD. Bought dollar CAD in and around these levels here, right? Look at the move on the 4-hour. There wasn't really any breaks in trend at all, and the market continued going up. That's exactly what I'm trying to find. I'm trying to find moves like that. So if one thing you can take away from this today is make sure that when you lose well. You break. If something breaks your trend, if something breaks your conditions, get out the trade. Don't risk too much at the beginning, so that you can then add in again if the market does start moving in your favor once more. So that's me. My name's John, Senior Market Analyst at Anzo Capital. Brought to you the markets in 3 today. Hope you enjoyed it, and I'll catch you in the next one.